What's up, guys? I have another trade setup for you today. It's January 22nd, and what we saw in the order flow this morning shortly after open was a pretty blatant CVD divergence. So I'm going to walk you guys through how I saw that and why it made me want to go long. My account is still not ready, but it should be tomorrow with Tradeovate, so I couldn't take the position, but I will show you guys where I marked it on my trading view, and then I'll show you on the order flow what it looked like and what I'm talking about. All right, so just to give you guys some context of what I was looking at when I was coming into the session was we had a very strong supply level at 6130 from FOMC a while back. So basically what I wanted to do was watch how price reacted up there, and as long as we were above 6100, I was just looking for opportunities to get long. So I noticed one right off the start of the session opening, like it was a blatant divergence. And what I mean when I say a CVD divergence, so the CVD is the cumulative volume delta. So these are all the aggressive orders coming in the market. And just so you understand, right now you can see all these large bubbles. These are aggressive orders coming in, and the CVD is the difference between the aggressive buy orders versus the aggressive sell orders. So coming into the session, you can see the CVD is moving downward because there's more selling pressure, aggressive selling pressure coming into the market. So when I say there's a divergence, it means that there will be, for example, you'll see price moving down, but at the same time as price moving down or sideways, you will see the CVD trending upwards, which basically is signaling that buying is coming into the market. So that is the exact situation that I'm actually about to show you guys. So let me just press play right here, and you will see what I mean down here on the cumulative volume delta. You will see what I'm talking about when I say there's a divergence. So we are already starting to form one right now. We open up, and this is by no means something you want to just immediately take a trade off of. I'm just noticing this as the session opens. So you can see spike of buying right before the open. We open up and some selling comes in. Price moves lower than we did pre-market, although the CVD is still making a higher low right here. So this is just something to watch as it develops. All right, so I'm gonna pause it right here. So look, this is pretty blatant to me. Like, you're pretty much moving straight up on the CVD, and price is almost looking like it's being suppressed or something. This is just like anomalous behavior. It's weird behavior that I would pick up on, and it's offering you context. So right now I'm thinking about setting a trade up or looking for a setup to possibly see if we do go down and test lower prices, what is going to happen to the CVD, because this right here alone is definitely a divergence. But to be sure, we want to see what happens on a retest. So all right, so I'm just gonna stop it right here for a second. This is a blatant CVD divergence to me. Like this, what this represents right here, you're seeing all the aggressive buying increase, prices not increasing yet. And also on the DOM, you can see a bit of absorption too. But basically what this is reading to me is large buying is coming in. We're seeing strong buying coming in. Price is not moving up yet. So that is just weird behavior. I don't know if that's a large participant trying to hold price down, or I don't know what that is, but I do know that there's a divergence happening here and buying is coming into the market. All right, so fast forward to 8:37, and you're just gonna see the CVD going straight up and price is going sideways. All right, so this right here is a blatant enough CVD divergence where it would be worth taking long. So I would take it long probably as soon as we tested this lower 612 area. After we got out of this and you see a little bit of buying volume come in, this is when I would try to take it long, and I would put my stop loss right below 611.25, right at that low. And I would just wait and see how that played out. But obviously, you know, this is gonna work out because I wouldn't make a video on it if it didn't. But I've seen many CVD divergences, and this one is just like a blatant, like you can clearly see that buying volume is just coming in, and price is not really representing that. And it almost seems as if there's two orders right here kind of like fighting. I don't really know if that's what's happening or not, but like I said, it would be worth a shot taking this long, and we'll see how that plays out. So like I said, you would want to put your stop loss below this 1125 at the low, and just pay attention to what happens after selling volume comes in. So like we just got some selling volume, and notice the CVD and watch what happens. Does volume come back in again for buyers? Right here, you're seeing yes, it will. And then you just want to keep watching this. This is obviously kind of playing out in your favor. All right, so let's just speed it up and watch how this ends up playing out. And then I'll talk about the exits. So, all right. So where I had my TP, this was the trade that I saw. And this is what you would want to do. So I have two trades right here because I wanted to take 50% off at this order 25, just because we were moving a little slower today and I didn't know if this was going to get filled or not. So what I like to do is I like to place my exits right below this, just in case that this doesn't want to fill, I will still get filled. So my take profit, first one for half, was at 6124, right below this order. And then I wanted to hold the rest of it for the 6130 supply zone for my remaining contracts. But just to show you guys how powerful this can be, because you would not see this on a candlestick chart. You would not be able to understand what was happening. But look, so you know that as price is moving sideways, we're seeing a lot of buying, or a significant amount of buying volume come in. And what you could have done was you could have placed your stop loss right at that low, like I said. And just to put it at the first order, that was offering you a 6.7 risk to reward. So that's crazy. And then if you were holding for the supply zone, you would have got a 9.3 or 9.4, sorry, risk to reward. So those are numbers that traders like dream of, and you would not understand what was going on without looking at the order flow in this situation. And I'm not even saying that this was like the best trade you could have ever taken, but this was one of those trades that like you see the clear divergence in volume and price, and it's worth putting the risk on for a six risk to reward, or a 9 even. I would say even less than that. Those are crazy risk to rewards that you would not get if you didn't understand where you could invalidate your thesis and put your risk on. So, all right, so before I get too far, before I get up to the exits, I want to show you guys this little flash dump. It happened right around 9. We had like 1,500 lots come in. You can see right here, 6121, 6122. So when I saw this today, I just marked it out just like I would do normally. 6121, what was it? 25. Let me get there, sorry. And then mark this out, 22. So I marked those out because there's obviously a large participant, and it was before right here, and they just swept the book. But notice what happens. We immediately go right back to that area, and then basically consolidate in here for a minute or two, and then bounce right off of it. And I believe we bounce off of it throughout the session a few times. So one time right here ish, and then 2 times right here before we have to come back into it and make the final leg up. But all right, so if you were wondering if you should hold on to your trade while these little dumps are happening, this is happening within like a 20-minute, 15-minute period. So it probably would scare some people out, and taking the profits wouldn't even been bad because your risk to reward was already crazy to begin with. So if you wanted to do that, then that would have worked out pretty well. But if you wanted to look for reasons to hold on, or reasons why you should be buying, on this little dump down to the 20 area, you can start to see another CVD divergence forming. And basically I would use this little low area or consolidation and match it up with this one. And you can see price is moving pretty obviously below these lows, which would be another CVD divergence telling you that it would be a good time to buy, or that buying is still in the market or entering the market. So that's exactly what could have led you to have more conviction in holding the rest of your contracts. And then what I would have done is I probably would have just taken them off immediately as soon as we hit 6130. But if you notice, I might have skipped ahead too far, but if you notice, after we filled this order at 6130, I don't even know if we do, it might have pulled. You can see on the DOM, which is not there anymore, but the DOM represented as if prices were not done trading up here, because usually when prices are done trading, they leave a tail and it's almost like a quick rejection. So it'll move up and then directly down, and it'll leave a low volume area, which would signify that prices did not like being up there and they were done trading up there. But at this moment, even this is not really indicating that we're done trading higher prices. And I'll see if I can show you guys. No, I can't, because this is the end of my session. But like I said, I would have taken it off already. But if you wanted to hold on because you never got like that low volume tail, I guess people call it, then that would have been a good indication that prices probably weren't done moving up yet. That was the example from today of a CVD divergence that I noticed right upon open. And normally I don't really trade based off CVD divergences solely, but I find that if they're really blatant, like if it's a very obvious divergence, I wouldn't be trying to pick them out like this is, if it's not blatant, I wouldn't even think it would be worth it to put an entry on, but they can definitely indicate what the volume's doing, and that can help you make a decision on whether or not you want to enter, whether or not you want to hold or exit, or whatever it may be. So hope you guys learned something from that one, and I'll catch you in the next one.